Hi, my name is Ricardo Wyngaard, and today I'm going to talk to you about Section 18A status or tax deductible contributions to non-profit organizations in South Africa. Non-profits can get two key benefits in terms of the Income Tax Act. The first one is tax exemption, and I've spoken about that in another video. The second one is donor deductible contributions or Section 18A status. Basically what it means is that if a donor makes a donation to a non-profit organization with Section 18A status, that donor can get a deduction from his or her taxable income up to 10%, and that donor will get that deduction by submitting a receipt to the South African Revenue Service, a receipt that was received from the organization, and SARS will then give the donor a deduction on his or her tax liability. So that's in a nutshell how it works. There's a couple of key requirements in order to get that particular deduction. The first one is that it must be a bona fide deduction or a donation. So it cannot be because the donor owed the money to the organization. That's not a donation. So for example, if the donor had to pay for services rendered by the organization, that's not a donation. It must be a pure donation, so a voluntary gift to the organization. Secondly, it can either be a donation in kind or a monetary donation, but it cannot be a donation in the form of a service that's being rendered. It must be a donation in kind or a donation in monetary terms. And it's, as I mentioned earlier, it's up to 10% of the taxable income of the organization is deductible. So if the donor has given more than that, then it cannot be deducted within that particular year. I guess the easy way to find out if activities are listed on Part 2 is to look at the application form, this form. So the activities that are in bold on this form will qualify for Section 18A status. So there's a list of activities, over 60 activities, but not all those activities are in bold. So only the ones that are in bold will qualify for Section 18A status. And what will happen is that the organization gives the donation to the donor gives the donation to the organization issues a receipt to the donor, and the receipt must reflect the following requirements. It is also possible for an organization to carry on activities that are in bold and activities that are not in bold, in which case they can only use Section 18A donations for Section 18A purposes. So if a donation is given and the organization is not using it for those activities in bold, then that the donation is not deductible in the hands of the donor. Also, if the organization carries on activities that are in bold and not in bold, the organization will have to submit an audited financial report that must state that the donations for which Section 18A receipts were issued were only used for Section 18A purposes. So that's very important that the organization make sure that monies for which Section 18A receipts were issued were used only for Section 18A purposes. So there are two kinds of public benefit organizations that can get Section 18A status. The one is the organization that actually carries on Section 18A activities, and the other one is an organization that provides funds to another organization carrying on Section 18A activities. So the one is an operational organization and the other one a conduit. If it is a conduit organization, it must transfer or incur the obligation to transfer those Section 18A donations within the next financial year, at least 75% of those donations. So it must, if it gets a donation that is for a conduit organization, that organization must incur the obligation, or it must transfer at least 75% of those donations within the next financial year of the organization. I hope this video has been helpful, and thank you for having watched it.